Call the meeting to order at 8:31. Good morning to all. And microphone closer for Craig, is that better?
Better.
Much better, right? Okay, with the trustees assembled, there's no need for us to do a Zoom protocol. And seeing no members of the public, there'll be no public input at this time, but we will reserve time at 9 o'clock if any member of the public does arrive and wishes to speak. Our first order of business is to approve the agenda. Do I have a motion to do so?
I will make a motion to approve the agenda.
Second.
Any discussion, changes, updates, whatever to the agenda?
I have none.
Hearing none, all those in favor of approving the agenda for today, say aye.
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 Opposed, abstained, motion is carried, minutes are, the agenda is approved. Next item on the business is approval of the minutes of September 20, 2024. Can I have a motion to approve those minutes?
So moved.
A second.
I will second.
All right. Discussion on the minutes. Everybody had an opportunity to read through those, so
They look fine to me.
they were excellent. As always, a thorough job. Thank you, Alberto.
You're welcome.
There being no discussion on the minutes, we'll vote. All those in favor of approving the minutes of September 20, 2024, say aye.
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 Opposed? Abstained? Motion is approved. The minutes of September 20th are approved, and I will get those sent off to be posted on our webpage. Moving along, old business, Doe Farm Land Stewardship Subcommittee. Just trying to think. I'm pretty sure I did not attend the Land Stewardship Subcommittee, even by Zoom, following my medical procedure. Update on the Doe Farm. I had a conversation with our consulting forester, Charlie Marino, in terms of getting a new proposal that includes the climate change stuff from him. I was able to share some information that I had accumulated working on a different project, thanks to the people that I was working with. They said, yeah, you can go ahead and do that, which should help him get that new proposal to us fairly soon. I'll push him to get it here by November. He's been busy with some other activities, particularly the harvesting activities, which happen in the drier parts of the summer and fall. And he tries to save the writing stuff for the less nice weather in the winter. So we'll move along with that. So any questions on Doe Farm Land Stewardship Committee?
No.
All right. Cemetery Committee, Tom.
Well, the cemetery is not terribly busy this month. We have had one sale, and I'll bring the deed to you after the meeting to sign. We have another one that we will need to wrap up shortly. Person passed away and they don't have a plot, and they need to get it done before the ground freezes, so I'll talk to you about that.
Okay.
We don't have a deed to sign yet until they make their choice, but so one sale and one sort of in progress. No burials in the past month, but some of the memorial companies are out there doing some work, trying to get things placed before the ground freezes. We do have one burial scheduled for early November. And the cemetery is still open. We'll make a determination on when to close it, based on when the ground freezes. No progress on the fence repairs. I am a little disappointed that There's been no progress in the last month, and I haven't gotten a response to my repeated emails, so I'm going to have to follow up on that. And then the only other thing is, as usual, I got notification from the local scoutmaster that the scouts will take care of the flags after Veterans Day for us, as they usually do. So that's it for the cemetery.
Excellent. A question occurred to me. We occasionally sell burial plots. Do we ever buy back? Somebody decided,
Yes.
for some reason, they were going to decamp to some other region of the country and no point in heading north again.
Yes. So the regulations state that we will buy the cemetery plot back at the price the person paid for it.
Right.
And in the last couple of years, yeah, we maybe had 2 people approach and say, yeah, I've decided to, do something different. I want to sell that plot back. So it does happen.
There is a mechanism.
There is a mechanism
Okay.
for that, yes.
Good, thank you. Appreciate that. So there were a couple of items. Deb Alstrom reminded me that, or I guess in reviewing the auditing process that had been done for the entire town, which included the trustees of the trust funds, one thing the auditors picked up is that we had not approved or annually confirmed our investment policy. And, I don't remember. I know we had approved the original policy. I think it's the last time it was gone over in great detail was in 2022. But I don't recall ever affirming that in 2023, and we certainly have not done it in 2024. So I think I sent everybody a link, or at least told you where to find that investment policy, and my reading of it was such that we're pretty much in line with what that document states. The only thing we really have changed in the last year or so was to change one of the benchmark indices, but that had more to do with our evaluation of the performance of our investment advisors as opposed to the evaluation of our portfolio. So we could probably update that one, say for January of 2025, put it on our list of things to do first thing in the year, and that'll be, that way we won't get all the way to the end of the year and confirm it. But if someone would make a motion to confirm the trustees' investment policy for 2024.
I move that the trustees approve its investment policy for the year 2024.
And a second.
I will second that motion.
All right. Discussion. Good idea. Good idea. I did wander through and look at the various, particularly the allocations between fixed income and equities as relates to the capital reserve, the town trust funds, and the cemetery trust funds. And my latest reading of our document is we're within fractions of a percentage point of what those allocations are. So we're following the investment policy, and our Cambridge Trust advisors are following our investment policy as well. So I think that's all working quite well. Any further discussion? If not, all those in favor of confirming the trustees' investment policy for 2024 signify by saying aye.
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 Aye. Those opposed? Those abstaining? The motion is carried and the investment policy is confirmed, and I will do whatever it takes to let folks know we've done that. one of the things that Cambridge Trust had asked us to do was to confirm a policy or a treatment of income for several years as we received income on our various investments, and they weren't necessarily spent immediately. We had built up apparently a pile of money, and they said, gee, we should be earning something on that. And so I forget exactly when they began that process, but they would take and reinvest some of that income, and it would sort of temporarily show up in the principal piles and earn a little bit additional income. And that made great sense, particularly when the interest rates were very low, cruising along at 2-3%. But when the interest rates started rolling up, I guess when the interest rates rolled up, then it made sense to do that and earn some stuff. But now that the interest rates are starting to roll down, Cambridge Trust is kind of untangling us from that process, but they still do it to some degree. The previous trustees, Mike Evangram and Bill Cody and Craig Seymour, had signed a letter saying, yes, this was fine, but that we understand that when we get to the MS9s and MS10 official reportings, all that stuff gets separated back into the buckets it's supposed to be in. So there's no, there's no conflict, mixing of the money as far as the reporting is to the state and in terms of what we have to spend. It's only for the purpose of managing the money and making sure that we make a little bit more. And so to that end, our Cambridge Trust advisors had asked us to sign a letter, and I have prepared the same. And I guess first I would ask if there are any questions about that policy and what we're going to do in terms of signing. All right, I guess I need a motion to approve our letter for Cambridge Trust treatment of income.
I will move that we approve that as we've discussed previously.
Second.
Any further discussion? All those in favor say aye.
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 Opposed? Abstain? Motion is carried. And I will sign same. And share, there's probably two copies, maybe even 3 copies.
There's 2.
Send them your way. And when our Cambridge Trust advisors arrive around 9 o'clock, I'll part with a copy for them and save the postage. Thank you very much. We're still at a few minutes before 9 o'clock, so we'll be waiting for our Cambridge Trust advisors, so we'll skip over.
May I take a look so I can get the wording here for the minutes?
Okay. So we'll postpone item 6, the quarterly report from the Cambridge Trust advisors, until such time as they arrive. We do have a request to spend some money.
Could I ask a favor? Could someone close the door, please? I'm
Oh,
hearing the
yeah, we got all the
chatter.
voting out in the
Thank you.
hallway. Thank you, Victor. We have 4 requests for disbursements of funds, all related to scholarships in the Oyster Rivers High School systems. Let's see. The first request is for $9,000 covering an environmental sustainability scholarship, a Robbins scholarship, a Sarno scholarship, and Slezak, except Swift. And I think, I don't recall if we put those details in the minutes or not.
I don't remember
Yeah, I
either.
don't remember either. It's been a while. But anyway, it's a request for $9,000, and these are from expendable scholarship funds, which,
I think we said that it's coming up. I think.
yeah, we can at least the gross amounts
Yeah.
for each request. There's that group. There's also something called the My Pathway Trust, in which they made 3 awards. They don't specify to whom or to what, but it's $2,100 coming out of those expendable funds. So from the Peter Grant, so the next 3 are actually a little more complicated. The Peter Grant Expendable Scholarship, they're intending to spend $4,519.05 plus or minus. And the idea is to spend all of this and close the account. This is an expendable trust. And similarly, there are 2 Murdoch scholarships. One, the Anna Ebel Murdoch Memorial Nursing Scholarship in the amount of $1,100, and the Joseph B. Murdoch Memorial Engineering Scholarship in the amount of $1,000. All of these are expending the entire amount available, and we've been asked to authorize the closing of those accounts with Cambridge Trust. So the school district is spending all the money out of it. We're essentially approving those things. And then another thing that we'll do in a minute will be to approve and a letter to Cambridge Trust authorizing them to close those specific, the grant and the 2 Murdoch scholarship accounts. So is there a motion to approve these expenditures?
I move that we approve the expenditures for those scholarships.
And I will second that motion.
All right. Any discussion about these items? Seems pretty straightforward. One of the things that the school district often struggles with is these scholarships come in at a particular amount, they only earn a little bit, and the price of college education rises faster than that, and pretty soon it's hard to make a meaningful contribution to a student's education. And so having them in expendable form allows them eventually to get to the principal. And over X number of years, the scholarship eventually disappears, unfortunately, but at least somebody's gotten the benefit, a real benefit from the funds expended. So, I guess if there's no additional comments or discussion, we'll take a vote. All those in favor?
Aye.
Aye.
Opposed? Abstained? Motion for approval is carried, and we'll do some signatures. Today is the 25th of October. Time flies when we're having fun. Now, since we have so many pieces of paper to sign, and I think there's multiple copies of those things.
Okay.
Let's you start with that one. I guess there's not multiple copies of all of these. There's just the, that way. In the case of the grant, the large amount they donated it all to the Oyster River Middle School Outing Club, which is why they essentially cleaned that out. Moderately large sum of money, but good for
I think
them.
I have to sign one sheet.
Yeah, why don't you sign that? Those things go back to Ted. Thank you. This we're going to give to Cambridge Trust. Related to that, then, I have put together a letter, essentially under my signature as chair, authorizing them to close those three scholarships, the grants, and the two Murdochs. I suppose we should probably have a motion to approve that action. So,
I move that we close out the Murdoch and Grant Scholarship Fund accounts.
a second, please.
I will second that motion.
Any discussion? Any questions? Seems pretty straightforward. All those in favor say aye.
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 Opposed? Abstain? Motion is carried. And Cambridge Trust is now hereby authorized to take care of business. Monthly MS9. Haven't had a chance to look at that, so might have to postpone. Anybody looked at their MS9?
I did not go through it in
I
detail.
looked at it last
I think
night.
it just came in last night, so
Yeah.
it's a little hard
Yeah.
to cruise through. So why don't we table the review of the monthly MS9 sheet for essentially September until our next meeting. Item E, shortly after I returned from medical procedure, got a cheery note. Said, "Oh, show up to the town council meeting and give us the annual report." I said, "Oh, I can't do that." One, I don't have the annual report done, and two, I'm not leaving the house for another week, so forget that. But I am scheduled for November 4th, and I think I sent everybody a copy of what I had begun to think about doing. There's a couple of things I want to clarify with our Cambridge Trust friends this morning in terms of the differences between portfolio value and market value. There's a little thing called accrued interest, and I'm not sure exactly what that is. It may be the interest that we were talking about earned on the income. But anyway, they do report two different values, and I think for consistency's purposes, I want to make sure I report it the same, so that's why there was some yellow highlighting in that draft document. The other thing that was in the draft document that I put a piece of yellow highlighting on related to the availability of the monthly, essentially the holdings. And those things come on a monthly statement. I get a hard copy that arrives here. And I don't know if you all get a copy of the monthly account statements or not. The silence around the table suggests that you do not.
No.
I do not.
Okay. And so that was sort of why I put a little mark on that, because it said in the previous reports that Mike had filed that that information was available from any and all of the trustees. And I'm thinking, well, one, nobody has asked for it, but it does seem to me to be sort of burdensome to say that anybody could call any trustee and say, "Hey, how much of company X do we have, or do we own any of this, or how is this all related?" It would seem
We get that information in the quarterly report,
it's in the
but
quarterly.
not in the monthly.
Yeah, and I get it monthly.
Monthly,
And
yes.
although it's public information, we don't typically post it to the website because it would get reasonably cluttered. I suppose we could post what amounts to the fourth quarter. I would be interested in knowing if anybody was interested in posting the fourth quarter, which is essentially the summary, and it shows up in January, and we can get a PDF version of that. And if somebody wanted to go through the excruciating detail, they essentially have the beginning of the year, end of the year, calendar year, and that would make sense. And our holdings don't change very much. It's all pretty much driven in. So that makes sense to me.
Is that duplicative of what shows up in the annual report to the town, though?
I don't know if the excruciating detail is in the annual report of the town. I have to go look. I'll ask Deb about that. So this can be an ongoing discussion
Yeah.
of what we want to prepare. But my inclination is to reduce the burden on all of you. And if somebody really, really wants to have it on a monthly copy of something on a particular month, that they can contact the chair
I
of the
think,
trustees.
I think that makes sense.
Yeah, I agree.
I don't expect that the phone will be ringing off the hook,
Yeah.
will be buried in emails. But I am in favor of the public understanding that they can get a copy of that and can see exactly what it is that we have and go forward from there. So
Yeah,
at this point, I guess I wonder if there's any input that you might have to me in preparing the annual report. And if you haven't had a chance to mark up or do anything with that, I would ask you to do the same and send by email, and I'll try to incorporate your thoughts. Did anybody see anything right off the bat?
No, it looks good to me, actually.
Yeah, I gave it a cursory read,
Yeah.
but did not, get that far into the details.
Yeah.
I'd be happy to do that over the weekend.
Great, that would be terrific. I just, as long as I have it by, say, Halloween or
Okay.
shortly there by next weekend, so I can put it together. Probably by Halloween, because I like to get,
Yeah.
even though it's not required of me, apparently, according to Karen Edwards, I think some paper copies to hand to the town council so they know, they can see numbers in front of them. And that's, I think, one of the changes that I wanted to make to what had been done previously was, instead of burying the numbers in a text, kind of organizing them in a table. So it's a lot easier, so somebody can go down and say, oh, yeah, there's that number, there's that number. I see where it comes from.
Yeah.
And again, that was one of the reasons why I have this portfolio market question, which I'm going to pose to our friends from Cambridge Trust. Are there any other issues or things bobbing around?
Well, there is one thing on the agenda. I note our next regular meeting is the day after Thanksgiving.
Yeah.
And I don't know if we want to, I mean, that's how it is by the calendar, but do we want to move that for the convenience
Yeah.
of those who may be traveling?
Is
I
the,
would like that, if we can move it, because I'll be out of town, for Thanksgiving.
that was I guess I was struggling to remember when Thanksgiving actually was, so that's,
Thanksgiving this
I have it
year.
on my calendar as the 22nd, but
yeah, that was that's the question. Is it the 22nd or is it,
Yeah, I think we should move the meeting to the 22nd and stay out of the way of Thanksgiving.
all right, Thanksgiving on the 2024 is scheduled for the 28th. That's the official day. Okay. So the 29th is, nope, we're not going to do it the 29th. So I would be definitely in favor of changing the meeting to the previous Friday. Does that work for folks?
That works for me, so
Yeah.
moving it to November 22nd.
To the 22nd, okay.
22nd.
Yeah, that works for me too.
Okay, good. Let's do it then. That fit in your schedule, Victor?
Perfect.
Great.
I'll
All right, that's good. There's nothing else for the good of the order. I think we're ready to turn things over to our colleagues from Cambridge Trust, Chris and Mike. So we don't forget and wander out later, I have a letter authorizing the closure of some scholarship accounts.
Excellent.
And I have a letter approving the investment of the income policy.
Oh, good. Excellent.
We're,
Thank you.
we're trying to clean up little things
some
as
boxes.
we go along.
Sure.
Oh, and we have copies for you here.
Yeah, so a quick question on the closure of some of the accounts. Are those going to be combined with any of the I assume those are the scholarships that we had talked about
Right, they're
previously?
scholarship accounts.
Are those the ones that are zero balance that were just?
The balances have been cleared.
Okay. And I think Deb had said that there was, I think, two that had, I don't know, maybe about $1,500 or $1,000, something like that, that she was going to, you guys were going to distribute and then close. Is that?
Right, there's an $1,100 one and a $1,000 one, both
Okay.
Murdoch scholarships.
Yeah.
And the grant one is a $4,900 and change.
Is that a part of the closures that
Yep.
listed there? Okay. And then I think we were waiting to, she sent me like a preliminary distribution just to see how we would word it, to make sure we can zero it out. But I don't think that was approved by you guys or whoever needs to approve it
Yeah,
yet.
we approved the expenditures of that money today,
Okay.
and
Good.
so Deb will be able to go forward and figure out, okay, it's
Okay, just making sure. Excellent.
$4,923.16.
Yeah, perfect.
And
Perfect.
so we did not put the amounts in here, we just simply authorized Cambridge Trust to close those specific scholarship lines.
Yeah, that was one of our suggestions, working with Lisa, one of the town experts in-house.
Perfect,
Excellent.
perfect. Well, do you want to, any other
No, actually,
administrative items?
driving here, that was the two things I really had on my list that you addressed immediately. And the other thing was the letter, investment of income cash, which was basically the formal letter we had with the new trustee signatures. So as long as we have all of that, I assume I'll get the distributions from Deb next week, whenever they come over to us. That's all I had on the administrative side, unless there's any other need for distributions, let's say in the next quarter or 2 quarters.
There were some other scholarship distributions as well.
Okay.
But those are not closing out. Those-
Okay,
those are
usually
going-
they're smaller. Okay, that's fine. Yeah, not an issue.
There was one group for about $9,000 and another group for, I don't remember what the other one was for, but there was a group.
Okay. Yeah, we'll handle them as they come in, just wanted to know. That was all I had, Chris, if you want to go into the investment piece.
All right,
All right.
gentlemen.
So a lot to unpack here. Let's where do we want to start? We've had another great quarter. And we'll start there in terms of investment performance. Both stocks and bonds performed very well. Big catalyst was the Fed started to cut interest rates. We've talked a lot about that.
Excuse me, Chris.
Yes.
You have hard copies for us?
Oh, yeah.
Yes, I do.
Yeah.
Absolutely. Actually, that's how I wanted to start off. I wanted to apologize for sending this electronically so late in the game. In full disclosure, had the reports done early in the week, and while I was making dinner last night, remembered that I had not sent it securely to the group, so I apologize. That was on me. It's just been a nutty week. So going forward, you should have more than a few hours to look at it before the meeting.
I did see that it arrived in my email.
Yeah, exactly. But that's why we do hard copies as well. So we have the 50 basis point Fed cut, and really what led to that decision, as you know, we've been talking about this, does the Fed cut before the election, do they not? It really did appear at the time, and still with the labor market, that things were cooling pretty rapidly. One might make an argument that there's a mini recession going on with white collar jobs in this country, especially in the tech sector. You're seeing more and more layoffs. If you look at the JOLTS index, which measures the amount of job openings versus those looking for jobs, we basically went for, at the high during the pandemic of about 12 million openings for every employee or individual looking for work. There were 2 job openings. That's now down to a ratio of closer to 1.1. So a much more normalized market, but kind of speaks to, wow, the labor market has really tightened here. And you are seeing more layoffs, and you're seeing a lot less movement. And that's always one of the gauges to kind of look at when you're looking at the health of the labor market. Are people feeling confident to leave their jobs and go elsewhere? And so the movement of individuals, the quit rate, has significantly decreased, especially coming off the highs of the pandemic, where everyone kind of said, hey, either pay up or I'm going somewhere, that will. The Fed ultimately decided to cut 50 basis points. There were some weaker than expected economic data. retail sales, some different labor reports coming out, et cetera. Fast forward, we have gotten many reports that have revised labor numbers higher. We have seen a resilient consumer and economic conditions that have looked much better than anticipated. And so if you look at the bond market over the past 3 months, we've seen an incredible amount of volatility. And so we're looking at reports that are as of the end of the third quarter, where rates on the 10-year were hovering around 3.7. We're closer to 4.2% now on the 10-year. We have seen what's called a re-steepening of the yield curve, where the front end, which is controlled by the Fed, and they cut 50 basis points. You notice money market rates, savings rates, CDs, everything's come down 50 basis points. Also on your loans, depending how they're tied to a variable rate. But the longer end has stayed higher and actually has started to move a little higher. That's not necessarily a bad thing. We've been inverted for quite some time. And so having an inverted yield curve where rates are higher at the front end of the yield curve and lower, that doesn't make a lot of sense. It prohibits foreign investment into treasuries. And so we're starting to see a more normalization of that yield curve. But there's a few different things that are kind of propelling that. And better economic conditions, potential for Fed rate cuts to go down to 25 basis points, or we might not even see one in the month of November. So that is a dramatic change from just a month and a half ago when they cut 50 basis points. All the way to, if you look at the election, which is obviously everyone knows what's going on there. If you look at what has really happened over the last couple of weeks, the market is pricing in the potential for a possible sweep, and that's something that we didn't see in the cards the last time we were here. Trump has done a lot better in swing states than he has been. The race is virtually tied on a national basis. But if you go back to 2016 to 2020, whether it's Hillary Clinton or Joe Biden, they either had a 6 or 7 point lead nationally coming into the election, and then it got tighter. Now, polls could have gotten a lot better. My guess is they haven't. And typically polls undercount conservative Republican support. And so right now the betting markets are at about 2/3 for Trump and about 1/3 for Kamala Harris. That's a significant shift. And so we are actually seeing politics starting to creep into the markets, and sort of the re-steepening of the yield curve is just based upon headlines. A Trump administration would be spending a lot more money. And so what does that mean? That means it's going to put pressure on rates potentially. We kind of look at that, whether, if you've seen the numbers, I think $7 trillion was talked about, the CBO, Congressional Budget Office, talked about for a Trump administration versus Harris, about $3.5 trillion of additional spending. We think both numbers are kind of hogwash. I mean, it's the best guesstimate of what they've kind of talked about. But even if you have a Republican sweep, it's going to be by the narrowest margins in both the Senate and the House, but especially the House. And there are a lot of fiscal conservatives who are balking at any additional spending. So to get bills passed, even if you do have Congress, is going to be tough. Base case is still that we're going to have divided government. It does look incredibly likely that the Senate will go Republican. Obviously, the race is not being held today, and we don't know what the polls are ultimately going to be correct or not. But most likely, we will either have constraints through gridlock or some of the fiscal conservatives on the Republican side to limit that spending. Where I'm going with this is, with the yield curve steepening, we think it's actually providing us some opportunity in the bond space. And so we've been taking advantage of that by actually gradually increasing our duration over the past month. And so I've made some more trades in the bond side in the capital reserve and trust funds than I have in a long time. We were closer to about 3.25, 3.5 on our duration or interest rate sensitivity. You'll see on here we're closer to about 4.25 to about 4.4. So some big moves there. We're trying to take advantage of that move, position us for future growth there with our bond allocation. So I want to spend a little bit of time on how the market is already starting to move with some of the prospects for political change here. Let's see here. The other piece of this that I think is very noteworthy in the month of September, I don't know if anyone saw the headlines, we had a massive move in Chinese equities. Anyone see the move there? Okay, so I've talked about this many times. The Chinese economy is struggling mightily. They've been trying many different things, doubling down on policies of the past, and to no avail. And this time, they actually brought something to the table that was meaningful, and they talk about putting $90 billion into Chinese A-share ETFs. So that's the equivalent of the United States government coming out and saying, you know what, we're gonna take X amount of dollars, we're gonna throw it into the SPY, the S&P 500 index, just to get the stock market stabilized. Unbelievable. So on the backs of that, a lot of hot money went in. You saw indexes soaring, made a lot of national headlines. All of a sudden, everyone and their brothers creating an ETF to go after Chinese equities. To me, that's not the kind of investment we're trying to make here. I've talked about how we've actually been reducing our exposure to Chinese equities. Chinese equities before this time were down pretty significantly on a year-to-date basis, and our outlook has not shifted. We see that as more noise. You could plow as much money as you want into equities, but if you can't fix what's actually going on in the economy, then that's meaningless, right? Fundamentals at some point have to rule the day for a stock market, and so we haven't seen enough from the Chinese in terms of their willingness to get involved in the areas that are let's call it sick in their economy, which is the housing market and debt. They are starting to get a little bit more serious, but what is required is much closer to the magnitude of what we had to do back in 2008, 2009 with TARP and all these different policies and money that the bailouts essentially. You think of AIG, you think of the banks. That's what needs to happen over there. They've been very reticent to do that. First, it's kind of an admittance of that we've had to do this, that our economy is not in great shape. And second, they already have a tremendous amount of debt, that's something that is just adding to that. So that's China. I know it was in the news, the headlines. Our stance has not shifted. We are still incrementally overweight the U.S. at about 83%. Versus international about 17. And the only other thing I wanted to mention, I'll point to page 1 here of our outlook. Typically, this is more just for everyone to take a look at, but I think it's important to kind of look at a few numbers here, and I'll stick with the stock market indexes. So if you go to the bottom right-hand side, that table, index returns, and the 1 month, so this is September. If you go third from the bottom, the MSCI EM emerging markets, in 1 month, the combined emerging market index, which is only about a third China, was up over 6.5% in 1 month. So a huge move for emerging markets. Now that has come back down to earth in October, but you can see the magnitude of the move. You can also see the second and third lines, growth and value. You did see a divergence there, value starting to outperform growth stocks. And so that is something that is a 3-month trend, which we'll look at when we look at the performance, where value has significantly outperformed growth. Growth has been the winner. We've talked about that quite a bit. We do have the equity income strategy where we have a little bit of a growth tilt versus benchmark. And that's helped us to achieve a better benchmark return. But with the value starting to outperform, you have to say, okay, what's happening in the economy? Why is this happening now? And a lot has to do with the steepening of the yield curve, which is great for financials. Financials will do much better and have a much better way of making money. Think of net interest margins and just think of their business when you have a normalized yield curve. So if we see a continued steepening of the yield curve and we see a more normalized yield curve, that will be great for financials. So that's not just great for the big banks, it's also good for the regionals. So think of PNC, think M&T, others that are hitting 52-week highs, but also the smaller guys. So then you think of down cap. Large cap has been the place to be for a long period of time. Now you're starting to see small and mid cap doing much better. That will only hold if the Fed is able to orchestrate this soft landing or no landing, which is now becoming more popular, where we don't have this reduction in growth, and inflation is able to be tamed, and we just keep on going here. Too early to make that call. We talked about that, and I'm not going to go into the Fed always having to look at backwards data, and they have a big job ahead of them. But if this scenario does hold, we could see small and mid cap continuing to outperform, and banks being a really good place to be if the economy continues to chug along here. Anything you want to add on that?
No, it was good. I think what you're saying about the small and mid-cap exposures, it's something that, in the last couple of years, Cambridge Trust has not had in the portfolio. But with the normalization of the yield curve, banks making money on the difference between short-term and long-term rates, what they have to pay to depositors for what they can make on their loans, makes a lot of sense. I mean, it's been a long time coming. Banks have been under a lot of pressure with the higher interest rates, especially in the short amount of time that the Fed has raised rates. We had a couple of banks last year, I think it was, that went under, right? They were overexposed, overextended, and there was some concerns about, is there some contagion within the banking market? It wasn't. It was very, siloed, specific circumstances that led to those banks going under. But now, as we're getting sort of the reverse of the yield curve, or not having it be inverted, having it normalize, we expect them to be a lot more profitable. So very exciting, especially working for a bank. We hear about this all the time. So it's kind of, part investment, part employment, but all good things.
Absolutely.
Yeah.
Absolutely. I'll pause there. Any questions on the election, ramifications there, kind of our outlook? Obviously, we're still a week and a half, anything can happen. I could say we're not making any moves ahead of time, even given, where betting markets are, where polls are. That's not what we're trying to do. We want to understand it. We're trying to look at the market and say, regardless of who wins or loses, what Congress looks like, what do we think is going to be a good investment? And that's why I talked about the bond market. We think regardless of who wins, regardless of what's going to happen, we do think that spending will be more restrained than it has looked with some of the headlines. And I think those are the important things to kind of understand.
I have a question, Chris. It's very interesting what you said, that the market, the way you see it, seems to be anticipating a Trump, victory. How is that manifested in the market?
Yeah. So if you look at, we have a great third-party resource called Strategas, and they provide us with, from a political science lens, and then a fixed income, equity, and then macro. And they have some just great pieces of information to kind of say, okay, here's the headlines, but what's really going on in Congress, or what are the real ramifications? And what they do around the election times is they have baskets of stocks that are going to be tied to a Harris administration, or a basket of stocks going to be tied to a Trump that they kind of track. And what they do is they're almost like their own ETFs, and you can track them, and you can track performance relative to how the candidates are doing. So after the the debate and with Kamala Harris's inauguration, the basket of companies that are doing very well. Over the last, I would say, 2 to 3 weeks, as Kamala Harris has gone on different radio stations and in different interviews, and things have really started to shift, you've seen that basket come down, and you've seen Trump doing much better, especially in the swing states. What does that mean? What are those baskets? What are those companies? I kind of sum it up as, if you look at a Donald Trump administration, some of the stuff you can really have an effect that you don't have to worry about Congress. Think of natural gas. That's going to be a big piece, executive orders, right? So natural gas companies tied to natural gas being part of utilization, so think utility companies. Utilities are all hitting 52-week highs. And it's also coinciding with a new kind of realization of where AI is. We are growing our demand for energy way more than we ever thought. And so we went from just a few years ago saying, okay, we need to get these renewable energy, green power to replace what we currently have. My gosh, we're going to grow our electricity demand for the first time in decades, and it's going to be probably a third of what we need. So a third of, so we're going to increase by about 33%. So that's enormous. So that's why you're seeing utility companies do well. That's why you're seeing these major tech companies coming out and making deals with nuclear power companies, because they know how much they need. They're restarting Three Mile Island in Pennsylvania, one of their reactors there. You're going to see a major renaissance with nuclear power because we have to have it. We cannot build enough solar. We cannot build enough wind. It's not enough. We have to have all of the above, and you see more of a streamlined process to get there under a Trump administration. The other end of this is if you have a Kamala Harris administration, the renewables are going to do much better. And that's, again, executive action. Look at the different agencies that are responsible for mandating vehicle efficiency, for example. That's something on day one where that could be rolled back. With a Harris administration, that could either become more stringent to try to subsidize and or move the consumers towards electric vehicles, et cetera, in different ways. So anything from electric vehicles to electrification and renewables is going to do very well. And I think just boiling it down, value is going to do better under Trump, growth better under Kamala Harris. Now, the last time that we saw this happen, 2016, the market coming into the election, growth was significantly outperforming. That was a Hillary Clinton portfolio. If you were feeling really good, she was way ahead in the polls. We all know what happened on election night. Donald Trump wins. We are a value portfolio for 3 months. I mean, concrete companies, the ag companies doubling overnight, and all of a sudden it reversed when the market realized, oh wait, we're not going to get this $2 trillion infrastructure bill. Maybe we'll get $500 billion, if that, and it's going to take years to even see that come through. And so that's why we're sitting here going, we're not diving into any thematic trade regarding the election unless we understand the ramifications of in terms of what will happen regardless of the outcome. And when we do get the outcome, then we can pivot to say, hey, we like these companies, we think we're going to do better over time. But we're long-term investors. We're not trying to get the 3 to 6 month quick hit and exit. That's not how we operate. So we're going to be adding companies that we think over the long term will benefit from any policy or change of direction, whether it's from a candidate perspective, Congress, all of the above. I know that was a very long-winded answer. So, any other questions on
No,
that?
I had seen this,
subject?
one of the complaints obviously is
Yep.
the continued deficit spending.
Yes.
Which is going to continue under either
Correct.
candidate.
Absolutely.
Did see an interesting analysis by The Economist where they thought a new Trump administration would actually run a bigger deficit. The biggest chunk of that being the renewal of the tax cuts.
2016.
So there's a
Yep.
big tax expenditure that creates a bigger gap in
Absolutely.
the revenue stream and a bigger deficit. But we'll see, right?
Yeah, you're not wrong, and it's something that we have to get control of as a country. Is our deficit spending? We hit $1.8 trillion deficit in this fiscal year, which ended 9/30. And you sit back and you say, okay, we're talking about growth, and I'm like, well, we better be growing if we're spending almost $2 trillion more than we're taking in. How could we not be growing? And so then you put that in perspective. You go, wait a minute, is the economy as good as we think if we're just kind of inflating it with spending way more than we're taking in receipts? And then, so to that point, I absolutely agree. And I think no candidate is really talking about this. And I mentioned fiscal conservatives before, and we've seen this before where, it's always easy when you're the party that's not in power to rail against the deficit. It's one of the natural tax that anyone takes. So if you're not in power, the deficit's an issue, right?
Right.
And so we could see them, cave there as well. It's going to be very interesting. We need to see reform there. But 2025 is going to be fascinating again, regardless of who wins, because if they don't do anything, taxes are going up, and that's loathsome to everyone in Congress. They need to figure out how to make this work. So at a minimum, those at the lower end of the wage scale do not see a tax increase, right? So something has to give. But then you have Democrats or Republicans in New York and other states with higher property taxes, let's think New Hampshire, where salt is an issue. The salt cap of 10,000. So the state and local tax cap of 10,000, and that's not. This is one of the issues with that everyone has talked about. It's not just at the individual level; it's at the family level. So, by myself, it capped at 10, and me and my wife Mary Kate, we're capped at 10 as well. So one of the things they've talked about is at least doubling that, maybe tying it to inflation. You go down that road, that's kind of a giveaway to those that are more well off. So then you get that friction of trying to get anything done, and that's just one tiny aspect of the bill. So to your point, it's going to be fascinating to see how it all washes out. One bit of good news, and and we can get to the performance.
Finally, some good news.
What no one's talking about, and this is strategic again, what no one is talking about, if we didn't do anything, which we know we will, but if we didn't do anything, we're already on pace to have, we've already, start the year, we are $200 billion ahead of where we were last year in terms of the deficit. We're on track to be about $400 billion, less bad than last year. So right now our track is about $1.4 trillion. No one's talking about that. The deficit is actually going down. And that is a good thing. That's because growth has been better than expected. Now, this is where Congress comes in, mucks everything up, and then either gives tax cuts where we don't need them, or spends. But with that being said, September was the best month since 2019, where we're actually positive from a receipts to expenditures. So I'll leave you with that. So hopefully we see more of that, but we shall see. We shall see. All right. Let's go into the portfolios. On page 3, we're looking at the capital reserve, and again, this is quarter end, September 30th. You can see the top left-hand side, how we're allocated. We have around 2% in cash. Our bond allocation is just over 56%, and our equities close to 42%, so we're about 1.8 to almost 2% overweight our target per the IPS of 40%. Well, really what's important to look at is below here, bottom right-hand side, and that's a nice 12-month snapshot of how the account has done, and it's really, really remarkable when you look at the bottom right-hand side of 17.31. So the account has grown by 17.31% over the past 12 months. Net of fee, and given that we're only about just over 40% in stocks, is incredible, because if you look at historical averages, the S&P 500 typically returns 9 to 10%, bonds 3 to 5%. We're way above that. So the market forces that are driving this, obviously we've had good performance relative to benchmark, but the market has really turned favorably in our direction, both in the equity markets, but also the bond markets. You can see that we started at just over 2.58 million a year ago. We had a big cash flow from the agency funds closing of over 1.3 million. But really the important areas to look at is income. So over 118,000, that's interest from the bonds, dividends from the stocks, and market appreciation of almost, just over $450,000. I mean, that's predominantly the stocks driving that. So we've had a great year. I wish I could say this would, we have years like this every year, but we will certainly take it. We're taking full advantage of what the market is giving us, and that's the important part.
Okay, so a couple of questions just to be sure I know where all the numbers are coming up.
Absolutely.
First, we have a total return of 1731.
Yep.
Okay. That's calculated based on what numbers?
That is based upon the actual dollars that we are managing. So that has nothing to do with money coming into or out of the account.
Right, so that ignores the net contributions
Absolutely.
line. So it's really looking at the earned income and the appreciation, market appreciation.
You can see that, Ted, on the lower left in the chart, the graph there. The green line is the net investment. So assuming you had money under the mattress, adjusting for money in or out, and then the blue is the impact of the investments. You'll see that line jump up.
Yeah.
11 2023 or 12 2023.
Could you
To
turn your
adjust
mic,
for the money
please?
flowing in.
Okay.
Turn your mic, please,
Oh,
towards you. Thank you.
And so, and then there's another little piece.
Yeah.
we have a market value and we have a portfolio value, and the difference appears to be primarily in the item called accrued income.
Yep.
And we started off a year ago with accrued income of about 11, almost 12, and we're up to about almost 20,000, right? So there's a gap, there's a change in that of about $8,000, right?
Yep, and I
So
think,
now how does that play?
Sure.
What do we mean by accrued income, and how does that factor in,
great question.
if at all, into the total return?
yep, and that is something you won't see on statements. So when we're looking at this portfolio snapshot, we're looking at if we were going to liquidate today, given market values, what would your account be worth? And so 12 months ago, your portfolio, if we were having this meeting, was valued at 2.58 million. But if we were to liquidate everything, the account would be due just under 12,000, 11,900 in interest that had accrued while we held the bonds. So anytime you sell a bond that you hold, an individual bond, every day that you've held it, you've accrued income for holding it. You sell it, you'll get whatever that value is, but then you'll also get the owed income, and that's what that accrued income is.
Okay.
So as of,
And is that included in the total return number?
absolutely, yeah.
Okay.
Yep. Yep.
So if I were going to try to calculate, in order to get the result of 17.31, I need the net change between the two accrued incomes, plus the income earned and the market appreciation. I need those three.
Yep.
Delta on the accrued income,
Sure.
and plus the income earned and the market appreciation. Those three items
Sure.
Yep. Absolutely.
divided by a beginning value will get me
Yeah.
to 17.31.
And that is the rough way to do it. In terms of trying to calculate this, because we've had that inflow, it's going to be a little bit more complicated because you have a smaller beginning value that had, the market performed as it did, and then you had a bigger, so it's very lumpy. But that's essentially what you're talking about.
Yeah, but as it goes, yeah, I understand it.
Yeah.
Okay, the capital infusions from the town come in lumpy, and that'll change the income earned and the market. Sure. So it's not completely smooth,
Yep.
but understanding where those.
Yeah, no,
But that
it's
is real
important.
money if you went and sold it off.
It's real money, and that's why we include it and that's why we say total return. That's why we don't say return, because total return includes income. Income is part of the portfolio.
But it does not include the capital contributions from the town or the
No.
net drain from the town.
Correct.
Good, thank you. That's very helpful.
Yeah, absolutely. On page 4, you will see the breakdown of U.S. to international. Pretty much what I was talking about before. We're at about 82.5% domestic, international about 17.5%, predominantly within developed markets. And then again, our emerging market exposure, specifically in China, is closer to about less than 2% of that overall pie. And I think what's important on the next page, on page 5, is really to kind of really get into the details here and look at, okay, how do we get to that 17.31? So we talked about that, 17.31 from the previous page. That's a net of fee number, so we take our management fee out of that. That compares to our total fund benchmark of 16.95. So anytime after fee that we're beating our benchmark is phenomenal, because we already taken our fees out. We feel very good about that. That's where we want to be. Fixed income, you'll see an astronomical number there of over 9%. We were slightly behind our benchmark because we were slightly behind on duration, something we've closed the gap on that I alluded to earlier. But again, a couple basis points off there. Anytime you're over 9% on fixed income, that's where you want to be. We're keeping up with the index. But really, it's the equity line that is where the performance comes from. We are up just under 33% for a one-year number. That compares to our benchmark of about 29.5. The reason for that that delta, where did we add value, really was our overweight to the US, underweight international, or overweight to growth within our strategy. Think of Microsoft, different companies that have done very well. That stock picking has really done very well for us in the equity income strategy relative to benchmark, which you can see there below. If we need a refresher on how we get that benchmark, because that's great, Durham Total Equity Benchmark, how do we get that 29.5? And we take, if you look at the second from the bottom, the NASDAQ Broad Dividend Achievers Index of 30.34, that's 80% of that blended benchmark. And then the rest, 13.5%, comes from that MSCI EAFE index. So that returned about 25.5. That's developed international, that's predominantly Europe, Japan. And then 6.5% comes from the emerging market index, about 26.5. So it's just straight math. We're 80-20, like we talked about. It's per your IPS. That's how that benchmark is automatically calculated. I will point out on a 3-month, so looking at the quarter, a couple of items here that I think are of note, kind of speaking to what I was talking about earlier. If you look at the big drivers of performance here, if you look at the emerging market index of 8.88, emerging market had a big quarter. But really, the big winner was value, what I was talking about before, 9.5%. If you look at the bottom, Russell 1000 growth, 3.19. We haven't seen a divergence, let alone a 6% divergence, in quite some time. So that is very telling that the market has started to shift a little bit, and it's saying, you know what, some of these companies that have really haven't grown their multiples, but are still very solid, and also banks, financials, they're getting a second look. And that's what that is reflective of there, where value has started to pull away from growth a little bit into the quarter. Not saying that's going to continue. We have seen head fakes before. But again, if the Fed is successful at navigating the economy to cool it without allowing a snapback of inflation, which is something I haven't talked about, hopefully I don't need to talk about, because that would not be a good situation, then you will most likely see value performing very well here against its growth counterparts where valuations are much more stretched. Does that make sense? Okay. Any questions on performance here? Page 6, the only note I wanted to make here was duration, kind of what I was alluding to before. It's increased. We're close to 4.4. Again, that was closer to about 3.5. And quite honestly, earlier in the year, we were in the 2s. So that's something that we took very seriously to increase. Page 7 is just an FYI to show how we're nice and diversified. We're not putting all of our eggs in one basket on any given year. We do that intentionally to mitigate reinvestment risk. We never want to have a large amount coming due and then have to reinvest given what the market is giving us. And then page 8, again, as always, details all the holdings and how they have performed since we have held them. The only thing I wanted to make mention here, and I don't talk a lot about real estate, and I don't talk a lot about utilities quite a bit, but if you are on page 10, a couple different companies, just to highlight that our stock team's done a very good job. If you look at real estate, Digital Realty Trust, ticker DLR, we own about 12,000. We're up nicely so far. That stock's up 11% after earnings this morning. Why? Digital Real Estate Trust is tied to servers. So they own all the servers, or they own all the infrastructure for server farms. That is a great place to be. And they've done very well. They beat earnings and they've boosted their outlook. So again, not a huge piece of the portfolio, but a nice company, no debt, doing very well in a space that is really attractive for us right now. In a real estate market where we really don't like a lot in real estate, boy, this is a nice niche play to invest, and it's done well for us. Below there, utilities. We do own 2 utility companies in the portfolio. I will point to NEE, our biggest holding, Nextera. I'm sure you've heard of Nextera. You can see we have just over 43,000 in the portfolio. We've done nicely in the position. Nextera is one of those all of the above. They have renewables. They have nuclear. They own Seabrook. To give you an example, they're very diversified. They're former FPL, Florida Power and Lights. So they're a big conglomerate. a company we've liked for a long time, and you are starting to see those companies doing very well. So again, I don't talk a lot about we talk a lot about tech a lot of times, but I wanted to highlight some of our exposure in some of these other areas that we think are going to continue to do well. Any questions there? I will be brief here, just to highlight at a top level, the trust funds doing very nicely as well. Very similar allocation to capital reserve. Again, on page 14, the bottom right-hand side, you can see a 12-month number there, returning just over 16.5% net of fee. And you can see on page 16, the one-year number, 16.65 versus the benchmark, just under 17. So we've left a little on the table versus benchmark after fee. And really that comes down to our fixed income. I've had to do a little bit more work there to increase the duration. And if you recall back to some conversations, there was a big reticence to move out of bonds at a loss to increase duration. So I've been very sensitive to do that. I ripped the Band-Aid off that a little bit to get to where we need to be because I didn't want to leave too much on the table. But that's really the only difference, is the duration was a little bit lower versus capital reserve. That has been remedied. We are now in lockstep. So if you go on to page...
It is worth also stating, just generally, not about this report, but about benchmarks, they are kind of a fantasy return, right? There's no taxes, there's no fees, there's no anything that's in there. It's we're not backing out anything from the benchmarks, or we have to do that obviously for our own return. So it's a little bit of an uphill battle, but anytime we're there, nearly there, or above it, it's a great place to be. So I just want to point that out.
Especially after fee.
Yeah, exactly. The returns are kind of like a false number. You can't actually get them if you invest in the indices. You're going to be paying some kind of tax, mutual fund fees, trading costs, whatever else it might be. So just worth noting.
Absolutely. No, that's perfect. And then on page 17, you'll see the duration line at 4.34.
So it looks to me, just a quick scan of the
Yeah.
holdings between the capital reserves and the town trust funds.
Yeah.
They're essentially the same companies, just slightly different amounts, so it's...
Correct. You would expect to see that equity line be very similar.
Right.
Yep, absolutely. Absolutely. The only thing different is the cemetery trust. That's up just under 18%, 17.87. A little bit more equity exposure. The only difference here, we're basically tracking indexes. We're not providing as much additional alpha in terms of our own individual stock selection because we were using ETFs and funds. But again, done very well.
Cemetery's on page 25.
Yeah. But I don't want to take up any more of your guys' time unless there are
That was very helpful.
any questions.
The market has helped us do well, and and Cambridge Trust has helped us do well, and we thank you for that. I'm giving an annual report a week or and change from now to the town council. It'd be nice to have these nice numbers, as long as the council does not necessarily get used to seeing those big numbers.
Absolutely.
Happily, some of the, I don't know about happily, but don't have to go back more than a couple of 3 years and you'd see that, we were going in a southerly direction.
Yep. 100%.
And so that has turned around, but we're not necessarily going to be knocking down 17% every year. Would that we could, but
I think there'll be a
we're
reversion
not.
to the long-term averages, reversion to the mean, but
Right.
if you get a good year, take it, right? It's a banner year. So.
Yeah, there's going to be ups and downs, and it'll all
Absolutely.
smooth out to some reasonable number. So,
Yep. Absolutely.
does anybody else have questions of Chris or Mike?
No.
Well, thank you again for coming in. This is all
Can I
very
get a
helpful.
copy of the, or how do you want to get that to us? The
I'm going to hand you
letter?
these two letters.
Oh, perfect, okay.
Save the town.
I do have an extra
$1 copy of the
report. Do you guys want it for your records?
Yeah, why don't I keep one extra? Put it in the town.
Excuse me.
3 signatures?
Well, there's 3 on one because it's all trustees voted, the other is just me as chair telling you can close the account.
Okay, thank you very much for this, I appreciate it.
Thank you, gentlemen.
Thank you.
Helps
Be
clean
well.
things up.
Have a great holiday.
Yep.
You too.
Enjoy Halloween.
Yes.
The town has made a momentous decision. For as long as I've lived in the town, close to 40 years,
Yeah.
over 40 years, we have had Halloween the night before Halloween.
Yeah.
And this year they decided, nope, we'll go back on, well, I don't know when they made the change, but we'll do it on Halloween. So the kids are all
gonna break loose.
Yeah,
all
no
hell's
kidding.
gonna break loose.
No kidding.
There'll be some people who won't have read the town notes and will
Oh, I'm
have
sure.
discovered,
Oh, I'm sure.
wondering, where are the kids on
Yeah.
Wednesday night?
Yeah.
And then they plan to go away on Thursday because Halloween was over and all of a sudden the kids are gonna be toilet papering their house.
Leave the pick one basket in front of your house, right, and hope that that's.
Yeah,
safe.
try to be, yeah. And I was the beneficiary of this old policy because my grandsons live in Massachusetts and they do it on Halloween, so I could do Halloween here and
Yeah.
Halloween there.
Yeah.
Can't do it anymore.
Yeah. Yeah. We're going trick or treating tonight. They have a big thing in Algonquin where all the business owners have a
Oh, nice.
thing and stuff. Festivities are starting early in our household.
We had trunk or treat last night at my wife's employer. Everything's in the parking lot, and you decorate your car and your truck, and everyone goes around. Kids love it. I mean, it's a great thing they do. And then we're going to be in our town tonight for Milford as a whole.
Yeah, I saw something like that at Portsmouth Hospital the other day. They were
Yeah.
set up on a trunk or treat thing.
Yeah, it's new. We didn't have that when I was a kid, but it's a nice thing. It's safe. It's you don't have to. A lot of places don't have sidewalks. You can't have people walking on the side of the highway. So do it
Yeah.
in the parking lot makes sense. Absolutely. Cool.
All right.
Have a nice day, guys.
Enjoy.
Take care.
Thank you.
All right, thank you.
All right. Should probably, no other members of the public showed up, so we don't need to save time for them. Anything else for the good of the order? If not, I will entertain a motion to adjourn.
I move that we adjourn the meeting.
I will second that motion.
Any discussion? Assuming none, we'll call the meeting to close at 9:54. All those in favor say aye.
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 Opposed, abstained,